the banking sector really is a scary place to leave your money, largely because it's uninsured to a large degree. It's overvalued, it's undercapitalized and overleveraged. I think leaving your money in the bank right now is as risky as it gets. We're almost 200 trillion in debt. We're broke. We're insolvent. We're divided. We're not united. Our country is looked at as a laughing stock with the border, the elections, judicial system. All of this craziness that we see happening is not lost on the rest of the world. And so, yeah, I think this is going to only get more and more real, Lena, and people need to prepare. And that means getting their house in order, like a hurricane is coming, a financial hurricane, but also a real hurricane.
Hello, everyone. Welcome back. Today, I have with me Andy Schectman. Andy is the owner of Miles Franklin, an investment company that specializes in precious metals. The company was founded by Andy and his father back in 1989. Andy, it's so good to see you. Welcome back.
Lena, it's great to be here. Thanks for having me. It just seems that things are starting to spin a little faster. I don't know if it's me, but sure seems like it is anyway. But it's great to be back. Thanks for having me.
Absolutely. No, it's great to have you. I have so many questions for you and things that I would like to discuss. And I know our viewers are certainly looking forward to hearing from you too. I saw multiple comments saying, please bring Andy back. And I was looking forward to this conversation.
Likewise.
So we're starting to hear more and more about the issues in the banking sector. The banking industry is facing trouble, and we see commercial banks are carrying more than $517 billion in unrealized losses on their books. The FDIC recently issued a report indicating that at least 63 banks, US-based banks, are at risk of insolvency. So that's really bad news. And of course, another thing we have to talk about is commercial real estate. Commercial real estate debt is clearly a ticking time bomb. And now that the Fed the other day indicated that there will be just one rate cut, I think it's fair to say that refinancing the commercial real estate loans would be more challenging. So what is your take on the stability of the banking sector in the United States?
I think the banking sector is a ticking time bomb. It's massively over-leveraged and massively undercapitalized. And I mean, if you look at the commercial real estate situation, Lena, it is a ticking time bomb. I mean, I think you can see that in no greater example than what we recently saw in St. Louis, where the former One AT&T Center, the third largest building in all of St. Louis, 44 stories tall, which was sold for $205 million to a real estate investment trust in 2006, just sold for $3.6 million. Now, think about that for a moment. How do we continue to see these types of literally destruction of equity and massive hits to the balance sheets of these regional banks before we start to see a very big problem? $1.5 trillion or more in these leases and loans that need to be reset within the next year, all at higher rates, spells very big problems for a banking sector that, during the pandemic was allowed to relinquish reserve requirements down to zero. And so, yeah, I think we are nowhere near out of the woods yet for the banks. And quite frankly, you had Powell saying that we will see consolidations. That's not to be surprised. And look, I would simply say to you that we're a long way away from being safe in the banks. And when we talk about the FDIC, it has 130 billion or so in assets backing over 18 trillion in deposits. Most people, there are a lot of people who don't understand the significance of this. They don't understand that bail-ins were written into law in the Dodd-Frank Act. Most people don't even know what a bail-in is. In essence, the depositors are unsecured general creditors, i.e. the last to be paid in a banking issue. What's happened is that, the banks that have failed already, first you had Silicon and Signature that we legally bailed out by the Fed, by Janet Yellen, by the president. She said it was an uber majority vote between the FOMC, the FDIC, herself, and the president, but made it very clear that if banks fail in the future, that they won't be bailed out. They will be bailed in unless they are deemed through an uber majority vote to be too systemic. The other banks that have failed have been gobbled up by the likes of JP Morgan or other larger regional banks. So people really haven't had to think about the significance of a bank bail in, which basically means anything above the FDIC level, which we just talked about as being fugazi, goes into the kitty to bail in the indiscretions of the bank. And I think that, just by them telling us that they're all these troubled banks, these problem banks, more indication that it will happen. And, they lay crumbs at your feet so that they can say, see, we told you. But the question really becomes, what happens if it starts to become systemic? This is why Credit Suisse had to be bailed out by UBS, and why Silicon and Signature had to be bailed out, because there are banks that are systemically tied through derivatives to the industry that, if they go, the daisy chain really, I think, could be something that we really don't have an idea of how fast it plays out and what does happen. But leaving more money than the FDIC BS limit covers into a bank, I think, is really naive at this point.
Absolutely. And in terms of commercial real estate, because that's what's sort of driving the volume of unrealized losses, what is your expectation, let's say, for the next 6 months till the year end? Do you think that we will see the same type of short sales and selling at a really significant loss throughout the United States, or do you think it will mostly concentrate in certain market areas?
I think it'll be in, they call it the urban doom loop, where people are moving away from the big cities as things get worse, and then things get worse because people are moving away from the big cities. There's something called the Cloward-Piven theory that people should check out. It blew my mind when I read it. It's about, it speaks to a husband and wife, Cloward and Piven. They were professors at Columbia University in the 60s. Interesting that Obama went there, as did Madeleine Albright and Bill Barr and Eric Holder, and many of the people who are influential, including Jared Bernstein, this knucklehead chief financial or chief economic advisor to the Biden administration. I'm sure many people have seen that video that was going around Twitter, where he really embarrassed himself and the office of the presidency, really, as being the chief economic advisor. But this is a guy that went to school there too, and the whole thing of it is to overwhelm the system, the inner cities, through mass participation on entitlement and welfare system, and on blowing up the inner cities. I mean, if you look at 17 million people that have come into this country illegally, a large portion of them are in these big blue cities, which now, by the way, they're trying to give extra votes in the electoral college to these blue cities. I mean, you can't make it up, but the whole premise is to create a serfdom of people that will never vote Republican, that will, in essence, render the elections moot because they will always vote for the dole. And the premise is that you overwhelm the system, and which leads to universal basic income and on the way to socialism. Let's hope it doesn't happen. But this was taught. And if you read about the Cloward-Piven theory, you'll be like, my goodness gracious, this is what they're doing. But this is what's happening in the inner cities. People are moving away because of what you see in the inner cities. And they have no interest in going to work in these tall office buildings that have, a massive carry cost if they can work from home and feel safe. And that's what you see happening. So I think it will be concentrated in places like, New York City, San Francisco, any of the big inner cities, Philadelphia, where you're seeing a massive amount of migrant issues and people working from home. These loans, these leases are real, and people are just walking away from them. And yeah, I think because it feeds upon itself. When all of the people leave the office buildings, what happens to the restaurants and the bars and the shops around it? And they start to leave, and then it just feeds upon itself. So yeah, I think that this is really a very big problem that people should keep a close eye on.
Right. And one of my videos was focused on the commercial real estate debt and how it impacts the banking system. And I noticed that there were several comments that were effectively kind of very similar. And they said, well, why are they selling these multi-million-dollar commercial real estate buildings? Many of them are downtown, so very, very good locations. Well, what used to be a good location. Why are they selling them at a loss instead of waiting and just, seeing if things get better? And my take on it is exactly like you just pointed out, is that their forecast, their expectation is not good. They don't expect there to be nice restaurants around. They don't expect there to be many nice entertainment venues or things that would attract people whom they want to see as their customers moving forward.
Yeah, exactly. And you have to understand that the difference between a home mortgage and a commercial real estate loan is that they're largely non-recourse if for the commercial real estate, meaning that there is no recourse. You just give them the keys and say, I'm out, and you lose whatever you had into it. But when you take a look at these buildings, the maintenance of these buildings is worth more than they're bringing in. It's as if I placed a very, very large order for a client who says, I want $10 million worth of silver, and the price of silver falls by $1, and I'm out tens of thousands of dollars because the client disappears and doesn't pay for the order. Do I hold it and wait for it to hopefully come back? What if it falls another $1 and then another $1? At what point do you realize, my goodness, this is a weight around my ankles and I'm falling into the water? What happens? So I think it's a decision that has to be made. It's not one that people really like to make, but these are real situations. What's happening to the inner cities, to me, Lena, is just horrific and very sad. When you see lawlessness in the inner cities, when you see police officers beat up in Manhattan in broad daylight, when you see this wonderful places like San Francisco turn into what's the capital of California? I was just there. I couldn't believe my eyes. Sacramento. I mean, you can't believe what you see when you walk down these streets, tents and people doing drugs right out in front of you, and you're not really going to want to walk to a ball game or to dinner or back to your car at the end of the night, or any of these things. You're not going to let your 16-year-old daughter work at a mall in the inner city, in one of these big malls, just like the big one in San Francisco. Biggest one, they just shut the doors and left. The biggest hotel in San Francisco gave back the keys because at some point it just becomes ridiculous. And I think that's where we're at right now. There'll be parts where you don't see these horrible parts of the country where you don't see this type of horrible market action. But remember, it's the regional banks that hold 70% of the commercial loans. And so it doesn't have to be in your state where this happens for it to affect you, because the systemic nature of all of these banks and how they're all tied together and through derivatives and the reinsurance and all of these things that are all tied together systemically has a far-reaching effect. But yeah, I think it's naive to think that the commercial real estate problem will not really begin to put strain on the banks, and by a broader stroke also the economy, because you're seeing these inner cities just start to shrivel up. Many of them anyway, and I think it's just beginning the urban doom loop. So as the big money leaves these cities and goes to places like Texas and Florida, South Dakota, Wyoming, and moving away from the craziness, what's going to happen to everyone who's still there? If they have the ability to move, they will, and if not, it will just become worse and worse and worse. And these big high rises that have huge nuts attached to them. What happens there? I don't know. Do they turn them into public housing? I'm not really quite sure, but I will also tell you that it doesn't help the situation when you've had years worth of zero bound federal funds rate and really low interest rates and really, copious amounts of money poured into the system, where the valuations of these buildings have gotten way out of control, way out of whack. The price discovery. What is the real value as rates go higher? And to find equilibrium between rising rates and property value is going to be a very painful experience as well. So the valuations on these banks' balance sheets, most of them are fugazi. When you see a building in St. Louis that sells for $3.6 million, that was $205 million 12 years ago, Houston, we got a problem, a big problem. And that's just the tip of the iceberg. So I guess we'll see how it plays out. But if I were a betting man, yeah, you wouldn't see the Federal Reserve chief say, yeah, there's going to be a lot of bank consolidations. That's a nice way of saying it. He's telling us there's going to be more problems in the banking sector. And I think we're by no stretch of the imagination out of the woods. And then, we could also look at these fintech companies, like we see beginning to have problems, like we just saw here last week, the fintech companies where there's disputes about the amount of money that is owed between the fintech company and the banks that they're representing. So there's a lot of stuff right now where the banking sector really is a scary place to leave your money, largely because it's uninsured to a large degree. It's overvalued, it's undercapitalized and over leveraged. I think leaving your money in the bank right now is as risky as it gets.
Some people predict the banking crisis to be worse than that of 2008. And of course, that's really bad news. Of course, the scenarios and the circumstances are completely different. But if that's what's in store for us, a 2008 style financial crash, what does that mean for consumers? What does that mean for small businesses or those who have small businesses? And most importantly, how long do you think that it could last?
I think things can go longer than anyone thinks possible. And, what does it mean for the average consumer? I mean, look at this. What's the name of the bank? Synapse and the Tennessee-based Evolve Bank and Trust, and Synapse was the middleman, this fintech, and they're saying that $112 million that people have been locked out, and there's a disagreement between how much money is owed to the bank through the middleman is saying, well, we don't owe that much, and then you have the CEO say, we never imagined a scenario like this could play out, that no regulator would step in and help. I guess what does it mean is that I think people have a misguided sense of safety with FDIC, with funds being insured. Look, one big bank failure and FDIC is insolvent. And when you realize that, they only have 130 or 40 billion backing 18 trillion, this could go a whole lot worse. And if you look at the bailout legislation and read about it, it basically says that the FDIC has a couple of mandates when this happens. And the first is to make sure that the assets are redistributed. The depositor is uninsured general creditor, and they end up getting paid last, anything over the FDIC number. But that FDIC number of 250,000, they have up to 4 years to pay it out. And so when any of the excess would be paid out in stock of the new bank that takes over for it. People are going to dump that stock immediately because the stock doesn't pay the bill. I think it can go a whole lot worse than people imagine. Because look, the truth of it is this. All it really takes is for one bank to be bailed in, just one, because the public doesn't know what bail-ins mean. And one bank gets bailed in and people say, my God, they lost everything. And it would create a panic like you could not imagine. And what starts out as a trickle turns into a flood. And, how could something like this happen? Well, a lot of the things that I've talked about with you and with others for 4 years is about the loss of the petrodollar status. And the demand for the dollar globally has been synthetic since the last 50 years, since 74. Everyone's had to stockpile dollars. Well, I'm sure you've already covered the fact that Saudi Arabia has agreed or decided to not re-up the petrodollar exclusivity deal with the United States, meaning they can sell their oil in any other currency they want. And so what does that mean for the demand for the dollar? That synthetic demand is now fractured. The dollar hegemony is over. What does it mean? How fast will other countries stop accumulating dollars and accumulate other forms of currency to purchase energy? That's really the question. And what would it mean when all of those dollars come flooding home and hit our shores, creating much, much higher inflation than we're expected to receive or to deal with? And the byproduct of that spike in inflation is interest rates have to rise to compensate for it. This is not controlled by Powell, but by the market. What would the industry look like, the banking industry, at 10% interest rates? Boom, the whole thing blows up. And so now you start to see massive systemic problems where several banks are failing all at once. FDIC can't handle it. Banks are bailed in. You ask me, or I ask you, what happens then? How do people react when a dozen, 15, 20, 30 banks have failed because they're all underwater? And how about the insurance companies that are loaded with treasuries, which have done poorly in the last year and a half with the 500 basis point increase in rates? What happens when that happens, when rates spike and they start to fracture? The amount of panic, I think, would be extraordinary. So, this is the thing. I think you have to be proactive. It's like buying insurance, health insurance. No one wants to confront their own mortality. It's like buying homeowners insurance. You don't get mad when you come home after paying your home insurance premium and your house hasn't burned down. You're not upset about that, but if it did, you did the right thing. It's the same thing here. If you're not a contrarian, you're bound to be a victim when this all breaks loose. And I think the probability of it breaking loose grows by the day. But, a modern monetary theorist would want this. They would want a culling of the banks. And that's Lael Brainerd, number 2 at the White House in terms of economic advisory policy. Modern monetary theorist, Rand Point of FedNow, developed the CBDC with MIT. Well, she's really happy that we see bank consolidations. How big does the problem go? What triggers it? Well, that's anyone's guess. But I'll tell you this, I would not want to wait and find out. And that's why I tell people, one place to go is feddirect.gov or fednow.gov. I believe it is. You go directly to the U.S. government and buy treasuries of very, very, very short duration, disintermediating the banks. Because I think the banks are in trouble. And I don't know which ones or how fast or how systemic, but everything that I see around me will tell me that they're in trouble. And especially when you look at the problems with commercial real estate, which would then spill over into residential real estate, because a 4 or 3% mortgage is fantastic until you lose your job. And then what happens? So all of the assets that we value have been blown to sky-high proportions with zero bound federal funds rate for the last 20 years, and easy money created distortions in asset prices. And when we see rates rise, which I think we will, because look, the rest of the world isn't buying our bonds anymore. We've proven the weaponization of the dollar is about as stupid as it can get. And now we just voted to actually confiscate Russian assets and give them to the Ukraine. I mean, that's about as dumb gets, and almost too stupid to be stupid. And so as the rest of the world buys commodities instead of treasuries, which I believe have become more valuable than the currency you purchase them with, and playing by a new set of rules, you will see rates rise, and the strain that puts on the system, the banks, the commercial real estate, the companies around it, the businesses around it, and the economy at large will start to have systemic effects and reverberate through the entire economy. Yeah, I think that this is not just centered on commercial real estate. It is a symptom of a bigger problem. And when commercial real estate blows up and the banks blow up, then what happens? And so I think you have to look 2 or 3 steps ahead. But Lena, I think it's never been more important to think differently, to be a contrarian, to think outside the box. And safety in the banks is something that is a misconception in my mind. It always never was, but it is now.
It really does seem that we're in a perfect storm, right? So not only is it becoming obvious that the banking sector is in a serious trouble, but also the petrodollar agreement with Saudi Arabia just expired. It wasn't renewed. And it was clear, I think, leading up to the expiration, that Saudi Arabia wasn't really going to play along the same lines as it did maybe 50 years ago. So I guess my question is, what is your take on the expiration of the deal itself? Why did the United States, did we attempt to renew it? Did we have maybe alternative ways to ensure that the petrodollar status would be maintained going forward? Was there a plan, or is it just something that was, and let's just say an oversight?
Well, look, I mean, like I said, Jared Bernstein's thesis is to lose the world reserve status. That's first and foremost. And if you wanted to lose the world reserve status, you make a big deal about going green. You sign executive orders to do so, and then you weaponize the dollar, and not just weaponize it, but confiscate. And when I say confiscate, let's just call it what it is. It's stealing. And that's what they're doing. And you make the entire Southern Hemisphere say, my God, I mean, we're next, we're out. So much so that gold is now the second largest held in all global central bank reserves, exceeding the euro for the first time ever. And so the dollar and the euro are falling out of central bank reserves, and gold jumped to its highest level in 27 years at almost 18% reserves, if we believe the numbers that we hear. But look, this is a very, 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 very big deal. There was just a meeting, we talked about 200 meetings, BRICS meetings leading up to the big one in October. There was just one in Novigrad where 21,000 people attended from 139 nations. There were $80 billion nearly signed of bilateral deals signed on the sidelines. These are deals that are no longer using the dollar for settlement. You chip away at the dollar settlement. These countries selling treasuries and buying gold chips away at the reserve status. 59 nations, we are told, officially will plan to join the BRICS. 59. This is no longer a very small nothing burger. This is something very significant. It is encompassing the majority of human population, 3 of the 4 largest nuclear arsenals on the planet, the majority of global GDP. There was just an article, and I think it's very important that this is all put together. But there was just an article that came out by JP Morgan. And let me see if I can find it right here. I think I can, which says that China controls the majority of all of the rare earth metals. And I just want to read this really, really quick because I think it's important that we put all of this together, this whole growing group of countries put together. And it says that, bear with me, here it is. In 2020, this is from JP Morgan and their research analyst, her name is Amy Ho. She's the global head of, she's the executive director of strategic research, and Joyce Chang, the global head of research. And it says that the current tariff announcement on the 18 billion of Chinese imports has elevated the debate on whether China's dominance in the critical mineral supply chain will emerge as the latest battleground for U.S.-China strategic competition. And I know you asked me about Saudi, but they're all tied together. China produces 68% of the world's rare earth, things like which are used for things like magnets and batteries, 70% of its graphite, which is used for lubricants, electric motors, and nuclear reactors. But the real dominance lies in the processing. China processes 100% of the world's graphite supply, 90% of the rare earths, and 74% of the cobalt. We haven't thought this out very well. And so when you realize all these countries are joining together based upon commodities, as Zoltan Pozar said, why would the Saudis want to take our currency, which we have proven we're going to choose inflation over austerity, for oil? Why would they want our bonds that have performed poorly and, more importantly, have become weaponized? And we will take them from you and even use them to fund the country you're in a war against if we don't align ideologically. So what you are seeing is something that is a lot bigger than it appears on the surface. And I think what we are seeing is a growing chorus of countries that are finding safety in numbers. And when you realize that every country in the world's had to accumulate and hold dollars literally since 1974, and this now is over, you're seeing these countries, I think, use that as motivation to accelerate this union. And James Rickards has an interesting take on things, and he talks about the reason we haven't seen the common settlement currency yet is because they need to have greater mass. And if indeed you have 50, 60 countries that want to do this, you now have mass. His theory is, regardless of the gold backing of the currency, which it may be. I mean, why else would gold be reclassified tier 1? Why are the central banks buying it the way they are, using the suppression of the Western market to run cover for it, the paper price in essence? But he says, look, there's 10 countries right now, and if they sell with one another, even in a common settlement currency, those 10 countries are the only ones that will accept it. So how do you go shopping if you only have 9 other countries to choose from? Well, if you have 50 or 60 countries on board, now you have 50 or 60 countries that you can buy goods and services from. You have the majority of human population, of global GDP, of military might, all of the shipping lanes and the natural resources. They are doing this very methodically. They are thinking this out very seriously. They've also officially applied to Project Enbridge. And I know you've talked about that before. I've talked about it. It came out in 2021, and Project Enbridge is a very big deal. Project Enbridge is a joint central bank digital currency cross-border payment system that was developed by China, Hong Kong, Thailand, and the United Arab Emirates. And I've been saying for a while now that I think gold and oil have been remonetized. completely and totally. They are being used as money, viewed as money, more important than the dollar bills that buy them. And the first two trades that they did in 2023, their test trades that China did with this, was the first one for oil and the second one for gold, using the digital yuan and cross-border payment. Well, now you have, as of June 5th, Saudi Arabia has joined a China-dominated central bank digital currency cross-border trial in what would be another step towards less of the world's oil trade being done in dollars. The move announced by the BIS on Wednesday will see Saudi Arabia's central bank become a full participant of Project Enbridge. And at the same time, you just got the Saudi Crown Prince turned down an invitation today to go to the G7 meeting. So he's strengthening his ties with the BRICS, joining the Belt Road with all the other OPEC countries, joining the BRICS New Development Bank, joining the Shanghai Cooperation Organization, no longer selling oil just for dollars and making that very well known. Joining Project Enbridge. I mean, you can see little by little by little, they are entrenching themselves with this portion of the world that, and now they're saying we don't want to go to the G7 meeting and uses an excuse for it. You can see this is real. And what is the significance when they finally, there's a theory out there called Project Sandman. I don't know if you're familiar with it or not, but Project Sandman is basically, and I don't know how much veracity we put into it, but 150, 175 countries that have agreed to dump the dollar and the treasury all at the same time. When that is, what is the trigger? Don't know. But by not renewing the petrodollar deal, I would say that's a pretty damn big trigger, if you ask me.
You brought up so many important things. You brought up China's capacity to produce, to refine natural resources, which of course plays to its strength to effectively manufacture, thanks to its transition that it has already started years ago when it invested into its industrial base to make sure that it is efficient, that it doesn't use too much energy, and that it's able to produce goods at a very low price point that will, of course, attract buyers across the world. And of course, you brought up the petrodollar and Project Enbridge. So this is truly a perfect storm. And I think people here in the United States, they're not hearing about all of this because the mainstream media is absolutely omitting this. They're acting as if this is not happening.
Right.
But what can an average person, let's just say a person who's working, a 9 to 5, what can they do given all of this information? What would you do if you were that person to protect your assets? I know gold, of course, is a safe haven asset, but what would be like the top 3 things that you would do after hearing this information?
I would do the best I could to mitigate my exposure to traditional assets, like stocks, like bonds. I would do the best I could to get out of debt and get rid of variable rate debt, especially. Do the best you can to pay off any variable rate debt or consolidate variable rate debt into a fixed rate if you have the ability to do so. I would pay yourself first and let the laws of compounding work for you instead against you. And pay yourself first, meaning if you don't pay yourself first, if you're always just trying to make ends meet and not paying yourself first, you'll never get off the wheel. You'll never get out of the rat race. You have to let the laws of compounding work for you instead of against you. So, it's easier said than done, I guess. And I'm not trying to ignore that. I know 65% of this country is living paycheck to paycheck and 45% earning over 6 figures paycheck to paycheck. So what do? You try to get out of debt. You try to pay yourself first, and you prepare for a hurricane, a financial hurricane. You have food and water and batteries and things that you would need to survive for a few months. You have some small denomination currency, 5s and 10s and 20s at home, as much as you can have safely at home. You buy some gold, you buy some silver, small silver coins. Doesn't matter how much. When I started this company with my father 34 years ago, Lena, he told me that there'd only be one rule or he'd fire me. And this was the greatest gift my dad's ever given me, or anyone for that matter. And he said, I need to buy something, gold or silver, every 2 weeks when I get paid, period. And that was 34 years ago. And I've owned my company for over 2 decades. He's been retired. I talk to him every day. He won't fire me anymore, but I've honored my promise to him. And I bought something every 2 weeks for 34 years. And it's money to me. It's wealth. It's not an investment. And It was the greatest gift he ever gave me. Told me how to prioritize, taught me how to prioritize myself and my future first, and show me how to let laws of compounding and cost averaging work for me. That is the best advice I can give, because I do think this is real. Look, we live in a just-in-time society. All of this stuff would come at the expense of credit as well. As rates rise and banks collapse, you will see a massive credit contraction. And just as bullish as easy money and wide open credit has been for asset prices, the opposite would be in play if all of a sudden credit contracts tremendously. Just think about how much credit is used to bring a loaf of bread to a grocery store, starting with the farmer who's on credit to buy his giant tractor, whatever they're called, and the seeds to plant the field. And once he harvests it, he has to deliver the wheat to the trucking company, who's on credit to buy the trucks and the diesel fuel, who delivers it to the the grain silo where they turn it into wheat. They're on credit. And then back to the truck to bring it to the baker. They're on credit. The baker's on credit to bake the bread, who then gives it back to the truck, who's on credit to deliver it to the grocery store. There's so many pieces of credit that touch just a simple loaf of bread going from, seed to finished product at the grocery store. We're just in time, but that's just one thing. So I think people need to understand that this isn't just about the banks and the economy or the dollar. This is also about everything, because the whole world lives on credit. And when we see a massive credit contraction that would be brought on by a massive dollar devaluation, rates rising, banks collapsing, everything is tied together. And that's, why I think it becomes even more distressing when you see what's happening in this country. The lawlessness, the open borders, the election questions, the judicial system questions, all of the things that have created a country that is no longer united makes it only that much worse. I think you have to prioritize yourself right now and save the world one person at a time, starting with yourself. I wish my message was more cheery, Lena, but I think we are getting to a point where, look, you got the big BRICS meeting in October and the election in November. And things seem to be spinning faster and faster and faster and faster every single day. Do we really think that it will be smooth sailing between now and the end of the year? And even if we do have an election, God willing, half the country is going to be angry. So I think you need to prepare as if there's a big storm coming. And what does that storm look like? Well, use your imagination. How bad could it get? God only knows. Hope for the best, prepare for the worst. And if you prepare and everything is smooth sailing, so what? You leave your gold and silver to your family members. You donate food to a food shelf, eat it. Reluctantly preparing is something that needs to be done, like buying life insurance. I think this has never been more important. And the Saudis not only snubbing the G7, but not renewing the petrodollar deal, and all of the moves that they have made, along with the United Arab Emirates, who last time you and I talked, we talked about how they have publicly said, we don't want to take the dollar anymore. And they were the 7th largest exporter of oil in the world, a BRICS member right alongside Saudi Arabia, and an OPEC member. So this is starting to become reality. How bad does it get? How fast does it happen? I don't know. But it is scary, to your point, that people are not able to get out of the way of what they don't see coming. And I haven't heard this or seen any of this on the mainstream at all.
Absolutely. I don't think I've seen anything either. And but I think since I started this channel, I'm seeing more and more people starting to realize that the current monetary system, the current financial system, is based on the confidence in the United States economy. And since not many people seem to have that much confidence in the U.S. economy right now, due to high national debt, it's absolutely surging, due to deficits, spending, all of these things. Consumer delinquency rates are rising as well. So things are definitely starting to show some cracks.
At this conference that just ended on June 7th, you have Putin, who said the Bretton Woods monetary system is dead and gone, and the current one is based on the confidence in the U.S. economy. He said there is no other guarantee, so to say, other than confidence in the U.S. economy and the current global financial system. And that's right. And confidence behind a system that's lost its bearing, that's creating $1 trillion in debt every 100 days, that is going around the world imposing sanctions and stealing money from other countries and giving it to the country they're fighting a war against as the world reserve currency, who is largely viewed as being hypocritical across the entire Southern Hemisphere. It's true. I mean, we used to be backed by gold. We aren't. We are fiat. And now nations don't need to stockpile dollars to buy oil, according to the deal not being re-upped. Yeah, this is a big deal. What is the dollar other than, the confidence of an economy that is now a country that is now 34, almost 35 trillion in debt, plus Medicare Part B, 99 trillion in the hole. Medicare Part D, the prescriptions, 22. Social Security, 77 trillion. We're almost 200 trillion in debt. We're broke. We're insolvent. We're divided. We're not united. Our country is looked at as a laughing stock with the border, the elections, the judicial system. All of this craziness that we see happening is not lost on the rest of the world. And so, yeah, I think this is going to only get more and more real, Lena, and people need to prepare. And that means getting their house in order, like a hurricane is coming, a financial hurricane, but also a real hurricane in the respect that you should have things like food and water and batteries and dog food and anything that you think you need. Because if things got really, really bad, how fast would the grocery stores be empty? And I hate to sound this way, but I think, when you realize that 17 million people have entered this country illegally, they just busted, 8 or 9 people that had, terrorist affiliations that were planning on doing damage. Look, if 1% of these people want to mess with the country prior to the election in some awful way, that's what, 170,000 people? So how about 5%? That's bigger than any standing army. And they're in this country. And how significant is it? I'll let you all decide that. But as a father of 3 kids, I've never been more scared about this. And again, buying gold and silver, Lena, it's not to get wealthy. It is wealth that has outlived everything the world's ever thrown at it. And at the same time, the central banks are buying it at levels the world's never seen. First quarter 2024 outpaced first quarter 2023 is the biggest ever. Bank of India just bought 1.5 times what they bought all of last year in the first 4 months of the year and brought home 100 metric tons from the Bank of England. Saudi Arabia, Egypt, and 6 African countries repatriated all their gold from the New York Fed. The counterparty risk, the loss of trust. We've shattered the glass against the wall. How do you put it back together before mom and dad get home? You don't. It's impossible. Now, maybe Trump can slow things down a bit, but I wonder, have we crossed that line where we will ever have trust again the way we once did? And when you realize just how indebted we are, at the same time, you have, complete and total lack of fiscal responsibility. It's completely irrational, the amount of money that we spend and the debt we're creating, $1 trillion every 100 days. This is not getting better anytime soon. And nor will inflation. I don't care what they say. Look, imagine the budget is balanced right now. You still have 175 trillion in unfunded liabilities. Who's going to pay for Medicare, Medicaid, Social Security, and government military pensions? Who's going to pay? The Congressional Budget Office said by 2031, 100% of tax revenue will go just to pay the interest on the debt and mandatory entitlement like Social Security, which means military spending, which is discretional, would have to be borrowed. That doesn't take into account the 17 million people who are in this country illegally. Who's going to pay for them? Their clothes, their food, their medical, their schooling, their housing. I mean, we haven't thought this through. And I just think it's about time that it's going to accelerate. And I think if I had to guess, something will happen between now and the end of the year that are going to rattle people and wake people up. And maybe it's commercial real estate, maybe it's the banks, maybe it's some awful event, God forbid. I don't know what it is, but to think that it's not, and to see the petrodollar deal not be re-upped, and to see the Crown Prince turned down going to the G7 meeting, and to see all of these things, 50 plus countries want to join the BRICS now and want to formally apply. Yeah, this is getting real. What started out 4 years ago when I was talking about this as a crazy theory has frighteningly turned real. And I think that this is something people need to pay close attention to. So who is the media? You're the media. You're a whole lot better than watching any of the mainstream, and people like you who have the courage and the hard work. I know how hard it is to stay up to speed. I know how hard you work, and this isn't even your main job. I know how much you care, and people should respect and admire what you are doing. People can't get out of the way of what they don't see coming. And there are a lot of very well-read people out there who think they know what's coming, but they're reading the wrong stuff. And they will get run over by this. If we see, for whatever reason, a massive dumping of dollars due to the petrodollar deal no longer being in force, the byproduct of which is spiked interest rates, it will be a religious experience for this country, as all of the assets are inversely correlated to a spike in rates. But not just the assets, the banks and the insurance companies are too. So it's real. So prepare like something bad is coming and hope it never does. If it does, you'll be damn glad you prepared. Or maybe it means there's a hell of an opportunity when the dust settles. Maybe the American spirit prevails and we are able to pull out from this nosedive, and a new administration does, foster confidence and build this country, unite this country again, and that would be great. This country has always, I think, done best with its back to the wall, and that would be great. But to prepare and not prepare, I think, is foolish. So that's kind of my message, Lena. And I respect you a lot for what you do. You're one of the few people out there, honestly, who get it. And that's why the minute I saw your first video, I don't know, a year ago, I'm like, wow, she's one of the very few who's talking about this stuff. And I give you a lot of respect for the courage to do it and how articulate you are in bringing what is real news to the public. And I hope more and more people start following you, and it'll be my pleasure to help that out by sending that out to 80,000 people that we talk to, and encouraging people to watch real news, and that would start with people like yourself.
Well, Andy, first of all, thank you so much for your kind words and for your feedback. I really appreciate that, and it really does mean a lot, because people don't realize how, for me personally, this is very much a one-woman show. So getting things to work the way I want them to, and editing and finding the information that I would like my viewers to know, it certainly takes a certain amount of energy.
I know how much time it takes. I know how much effort it takes, and you bring up news stories almost every day. So I will vouch for you. It's a constant. I spend 3-4 hours a day, every day, 7 days a week. I'm sure you do too, and it shows. That's why you have 300,000 or 400,000 subscribers, and that's why I watch every video you'll post. It's about trying to gather as much information as possible from people like you and others out there who are doing the same thing, and then make your own decision. Trust your gut. Things don't feel right. I think people understand that. They just don't feel right, and let's hope we're wrong. But I would say this. I would simply say this: that our current administration has done more to harm this country than any external foe could have ever done over the last few years, and it's not over yet. We have a few months left that I think will be exponentially more volatile, and, as the Chinese curse says, interesting. And I hope I'm wrong. I truly, honest to God, hope I'm wrong, but I don't think I am. And you can see that. For MBS to not go to the G7 meeting and to not re-up that deal is as significant of anything that has ever happened in all of our lives. But how many people understand that? Yes, it hasn't like bang collapsed, but I assure you that it is not a good omen when you see the dollar lose its hegemony. And in essence, that is what just happened. And how fast it unravels, to what degree, I guess we'll see. But I think it certainly, the fuse has been lit. When does the fuse hit the firecracker? Don't know, but I think it's closer than it's ever been in my life.
And I would really like our viewers to understand that none of this is a really big shock, right? There were signs and red flags for several years now that effectively said that this is something that might happen. You really need to prepare for this. And for our leadership, this is something that you really need to take into account and try to mitigate those risks. Because West Asia has been very, very unstable. And we've seen the UAE, Syria's Bashar al-Assad became part of the Arab League, I believe, last year again. So they welcomed him back. So I think those are the things that were the signs that, MBS might not choose to go to a G7 conference next time around, that things might not really work out in the favor of the United States in that region. And so none of this is a big shock. It's been a long time coming, and now finally it's starting to come to light, and more people are starting to realize what this means for them and for their children and for generations to come that are now having to deal with massive, truly massive national debt that will certainly impact their quality of life and what type of comfort and life they're going to be able to afford. So with that being said, of course, gold and silver are the go-to safe haven assets. And I know it's very difficult to say what will happen in the next 6 months, as you mentioned, for the reasons that you mentioned. But what is your prediction with respect to gold price now through the end of 2024? We have the BRICS summit coming up. We have elections coming up. Are there any other things, important events that are going to take place between now and the end of the year that would impact the price of precious metals?
Well, those are the biggest, of course. I mean, the flow of gold from west to east, this transfer of wealth that I've been talking about for a long time now, is huge. And I think the underestimating of the significance of it is a problem. We're seeing so much gold and silver flow eastward. Just the other day, 3 Fridays ago, $500 million worth of gold was delivered to Brinks, Hong Kong, which is a COMEX facility, by the way. And they're all in kilo bars, which is ironically what trades at the Shanghai Gold Exchange. It's as if they are draining our exchanges, having them sent over in exchange for physical to places like Brinks, Hong Kong, and then trucked over to the Shanghai Gold Exchange. I think that when you talk about how high gold and silver will get, it will go higher than people think possible, because it's as if it's playing by a new set of rules. The price action, the resiliency is unlike anything I've seen. They hit it, it comes right back up. I think that the currency that buys these commodities it is not as valuable as the commodities themselves. This is Zoltan Pozar saying Bretton Woods 3, Bretton Woods 1 when we took over for the pound sterling, Bretton Woods 2 when we became the petrodollar, and that may be over right now. And Bretton Woods 3, a system that will be all about commodities. You look at the Chinese, they bought the London Metals Exchange recently. That's not the bullion LBMA, but it's the LME, which is all the base metals, copper, zinc, you name it. I already read to you that they control the majority of all the rare earths. Russia produces more wheat than the West does. China has struck deals on the Belt Road all around the world in under-industrialized countries to help bring their commodities, their natural resources to the fold. So you are witnessing a system that is breaking away from opaque debt promises by a broke, insolvent, and viewed as a hypocritical nation to one of commodities and transparency. This is real. And how high does it go? I don't know. Higher than anyone thinks possible would be my guess. And I don't know if it happens between now and the end of the year. But you can see, when you see the central banks, which are not only the most well-funded, but the most well-informed traders in the world, buy at levels that we are seeing right now, it should tell you. When you see India take 100 metric tons back from the Bank of England, when you see Saudi Arabia and Egypt, who just joined BRICS, bring all their gold back from the New York Fed, when you see the Bundesbank, the Bank of Austria, Hungary, Turkey, Poland, the Czech National Bank, they did the same thing too. Brought all their gold back from the New York Fed and the Bank of England. When you see Turkey be one of the largest buyers of gold in the world and apply to BRICS, these are all things that are happening, and there's no coincidence. In fact, the global gold supply right now with the central banks is basically as high as it was right before Nixon closed the gold window. It's as if these people in the know are preparing for a gold standard. Gold has now just outpaced the euro for the first time ever in terms of holdings and central bank holdings. And, so it's number 3, dollars, gold, euros. What is gold? It's the only other tier 1 asset. So the significance of it is huge. In a system that lacks trust, that wants to inspire trust, it will have to be backed by something. And for the BIS, which is the most powerful bank on the planet, the central bank, to reclassify gold as the only other tier 1 asset in the world, and to see the central banks buy it and repatriate it, removing counterparty risk the way that they are, I don't know if it's by the end of the year or later or sooner. I would just simply say, in a world of no guarantees and probabilities, the probability of gold outpacing people's expectations to me is extraordinary. It will go higher than anyone thinks possible. And you take out the central bank manipulation that forever has been orchestrated on the COMEX and on the LBMA, where the LBMA right now trades almost 3 billion ounces of silver per day. That's 3.5 times global mine supply, where they're trading 200 million ounces of gold per day. That's not normal. And, they only have, I don't know how many ounces of gold. They only have 300 million ounces of silver, yet they're trading almost 3 billion. I'm not sure how many ounces of gold the LBMA has, but the point of it is the rehypothecation of all of these metals by the bullion banks in the West have created an environment where the price has been muted. And they didn't want the price to rise because they wanted everyone happy in Western currencies and investing in Western treasuries and Western assets that made the Western bankers wealthy. Well, the game is changing because now you have countries wealthy enough, coordinated enough, sophisticated enough to stand for delivery. And they're draining the exchanges using these make-believe prices. In years past, no one stood for delivery. It was just a way to hedge exposure or to gamble. Now they're standing for delivery. And standing for delivery means these naked contracts, this rehypothecation, is enough to put companies, banks, or hedge funds out of business like that. And so, yeah, it's different. When I say gold and silver are playing by a new set of rules, I mean that. And I think you will see this come to a head at some point. But how high does it go by the end of the year? I don't know. And to make a guess would only be a guess, but I will say higher than people think possible over time. And you buy it not for that reason. You don't buy it to get wealthy. You buy it because it is wealth that has outlived everything the world's ever thrown at it. And now, the more things change, the more they stay the same. Here we are again, the central bankers who know the playbook, buying and possessing, repatriating from the Bank of England, i.e. the LBMA, and the New York Fed, i.e. the COMEX. We don't want you holding our metals. We don't trust you anymore. You've proven untrustworthy. We see the amount of leverage, the amount of rehypothecation. We see the risk in holding your assets. Are you holding our assets? And it's time to break free into a new system that will be about transparency, commodities, and physical possession, which removes any and all counterparty risk. And that's what these commodities offer, is an escape from that type of confiscation of assets. And when you see the U.S., who just voted to take the $5 billion that we're holding and turn it into munitions and give it to the Ukraine, and the $280 billion that the European Union is holding and take the interest from those securities and use it to give to the Ukraine for rebuilding it, for all sorts of things, including weapons. That's a whole different thing. And I think no one will ever trust us again, Lena. I think you cross that line, you break that trust, you shatter that trust, there will be consequences. Which brings me back full circle to title of my speech that I'm giving in Boca here next month at Rick Rule's conference. And I wanted to call it, "Is it too stupid to be stupid?" I turned it a little bit more political, but you have to ask yourself, with Jared Bernstein being the lead economic advisor, a man who advocates for losing the reserve status, with number two being Lael Brainerd, a modern monetary theorist who wants to see the banks collapse, wants to see a central bank issue digital currency. Could these things actually be possible? Is it possible that we let the country go to hell by letting people in and destabilizing it and creating disunity by having people question the cornerstone of this country, the judicial system, the electoral system, the immigration system, the wokeness that we see? Could it be that we told the Saudis we're going green and then go on this weaponization sanction binge? I mean, you look around and you could see, why the hell would these countries want to hold our treasuries when they've, not only with all of the stuff I just said, they performed like crap over the last year and a half. And we're choosing inflation over austerity, and inflating currency, an unstable bond market that can be confiscated, and a country that is no longer the beacon of light, at least at outward appearance, that it once was. And you have to ask yourself, is this stuff just too stupid to actually not be planned? I don't know. It feels that way to some degree. Either that, or the people who are supposedly our elected leaders are leading us down a very dark path where hopefully we can pull up from it here over the next few months. But God help us if not. If this current administration stays in office again, I think we're in big trouble. And I think you need to prepare as if that's the case.
Andy, thank you so much. This was a fascinating conversation, as always. How can our viewers contact you?
Yeah, and I hope you invite me back again, because, this is why I don't talk about this stuff at parties or with friends unless they ask me, because it doesn't portray happy, exciting news. But I would rather know what's coming and be able to get out of the way of it and not just survive, maybe even thrive, than be run over by it. Lena, I hope I'm wrong. And what scares me more than anything is that this stuff that I've been talking about in, I don't know, 3,000 videos since 2019 that are still out there, I've been right. And I don't take joy in that. I mean, it scares me, actually. The stuff that I've talked about when everyone thought I was crazy in 2019, saying the Saudis would dump the petrodollar and the BRICS would come big and strong, and all of these things that have happened, I'm frightened by it. So what do? I try to distance myself from traditional assets. I try to remove counterparty risk. If you want to buy gold and silver, please put in the subject line Lena sent me. We will give you white glove service. We will send you a price list that we don't publish that will be as good or better than anywhere in the country. We will answer any questions that you heard on this or previous shows, or anything that you have questions about, IRAs, you name it. We'd love to earn your business. That's what I do. I look at gold and silver as an escape from the matrix. I try and be completely objective. And the only other place that I have felt comfortable to put my own money over the last 6 months to a year has been really, really, really short-term US Treasuries, 6 months in duration or less. And I don't know where else to put it. Yes, I own a precious metals company, but I believe enough in it and what it represents in terms of removal of counterparty risk and an asset base or asset class that is being voraciously accumulated by the central banks who know the playbook. They're not just the wealthiest or the most well-informed. So please take it for what it's worth. Yes, I think people should buy precious metals, whether it be from me or anyone else. And I think that people should do the best they can to get out of debt and prepare. And that's what I would do. And if you have other assets, you don't want to put it all into metals, go to treasurydirect.gov. That goes right to the US Treasury. You disintermediate the risk of the banking sector, and you can buy, I don't know, 6-month, 90-day treasuries that will, I think, give you the liquidity you want and take a lot of the risk in the banking sector out of the equation. And if the government fails, we're all in trouble. So that's what I would do. And I would love to talk with your listeners if they have questions for me. Again, info@milesfranklin.com. Direct them to me. I will try and get to as many as I can. And I really love coming on your show, Lena. I hope you'll have me back, because I think the next few months will be the craziest few months of my career. And I would love to ride shotgun with you a little bit more and talk about it as things start to unfold.
Thanks, Andy. I look forward to having you back.
Thanks, Lena.